Good morning, Everett. Can you hear me? I can see Everett. Everett, can you hear me? Ralph, you there?
Yes, sir.
I got you. I got Everett. Everett, can you hear me? We got about a minute to go. Looks like Everett's getting his audio connected. All right, it is 10 o'clock. I got Ralph. Everett, can you hear me now?
Yeah, I can hear you.
Awesome, awesome. Hold on just a sec. Let me check my chat. Great. Looks like it's just us two today, Everett and Ralph. Just a second. Let me get my screen share up. All right, you should both see, it should say Applied Accounting Chapter 13, Stereolab Company. It's a trial balance. And we're going to go ahead and look at these financial statements again today. And so I was looking over, the exam is written, it's ready to go. And so what I'd like to do with, since I just got two of you today, I don't know if anybody else is going to join us, and I don't know we got 15 minutes, is I'd like to walk you through this handout and take a look at these financials one more time, and then maybe take a little time just to talk about the test and what you need to be able to be prepared for next week for the exam 3, which is chapters, chapters 12 and 13. And then I also want to take a minute to talk about what's going to happen when you log into Connect. You'll see, actually, you're going to see an exam 3, which is our next test. And then you're going to see an exam 4 that'll say optional. And I want to take a couple minutes, since I've got the two of you, just to kind of explain what I'm doing with that, and also talk about the timeline. You know, today is, I think, May 6th, I believe. And I want to talk about the timeline in terms of what you got to be able to get done next week. All right, so I've got this up, and you'll notice the requirements of this handout says prepare an income statement, equity statement, and classified balance sheet. Now, for the sake of our class, and I know I showed you guys this on Monday, your textbook shows you a very, very long version of what they call the multiple step income statement, classified income statement, and they show you all these different line items. And I just want to reiterate that I'm not going to require you to know all those line items. And I think I told you Monday, just know the basic, and I'll write this real quick here, the sales cost of goods sold format. So as long as you understand this, I'll write this off to the side here, where you've got your net sales, and you're going to subtract out your cost of goods sold to get what is called gross profit. And then you subtract out your operating expenses to then get your net income. And again, I'll put up the solution to this in a moment. It's all typed out in a spreadsheet. But what I said on Monday, I'm just going to say it again right now. Income statement is still the income statement. It's still revenues and expenses only. It's just formatting. That's all it is. They show you these different formats. You've got the single step income statement. You've got a multiple step income statement. And the idea is usually if we had more time and we would do more of this in class, is I would show you some examples of what the industry wants. It's typically investor user driven in terms of this is what we want the financial statements to look like. And it's because of that's why they look like this. And so I don't want you to lose track. I think at the beginning of the semester, I said I didn't really care how you did it. Just show me revenues minus expenses. And that's just to kind of get you to learn the basics. And at this point, we're still studying the basics. I just want to show you there's certain formats that, you know, the investors and the creditors and managers want to look at when they do their analysis. And so this is one very important format: sales, cost of goods sold, gross profit. If any of you go on to take the next accounting class, which is financial accounting, you will dive more in depth into this idea as well. Okay, so let's start with number one. I'm going to walk you through these three. It'll probably take us about 15, 20 minutes. I don't know, no more than that. And at that point, we'll do some analysis, and then I'll go back and then I'll kind of talk about the study guide, and then we'll talk about the test and see if you guys have any questions. So again, on the income statement, we're looking for revenues and expenses. So this is what you've got. I'm just going to point out, I'm looking for, I see it right there. It says service revenue right there. And I kept this pretty simple. I'm just giving you guys one revenue account. So in this case, service revenue would be the revenue account. That's the first one. And then after that, I'd be looking for my expenses. And so I kept it nice little order here: cost of goods sold. And you'll notice I've got two here to show you this. It is a just 25,800. What I meant to say here is that's actually an expense account, even though you don't see the word expense on it. And that might be kind of new for some of you. So cost of goods sold is essentially your inventory expense. Then you've got salaries expense, utilities expense, and rent expense. So I just listed three different operating expenses. So if we said put together a simple cost of goods sold format type of income statement, and at this point, I'm going to go back now and look at the solution with you, you would have something that looks something like this. And just look at the income statement right here and highlight it. And you'll notice this is the first part of it. Let me get the whole thing on there. I'll reduce it. There we go. That's a little bit better. All right, you'll notice that we've got, here's your service revenue. Subtract out your cost of goods sold to then get gross profit. And then you'll notice after that, I'm simply just listing all of your expenses: salaries and wages, utilities, rent, to get net income of 2,200. Notice I've kept this thing real simple for you to remember. And this, if you can understand this format for the test, you'll be fine. So again, just look for some sort of revenue account. I'll give you the cost of goods sold account, which is like your inventory expense. Subtract that out, get gross profit. Know this relationship. Think of this kind of like a formula as well. And then you subtract out your operating expenses to get net income. This is a format that is preferred by a lot of companies, a lot of organizations, a lot of managers. They like this format. Okay, so if I go back to the handout. So once you get that one in, so let's say we've got financial statement number one, we got the income statement. Then the next thing is we go to the equity. And just like before with equity, you want to look to see if there's any beginning capital. And on this handout, again, if I had you in class, what I would talk about is this thing called capital stock. But just think it's our capital account. It's right here. We've got $63,800 in capital. So that would be our beginning balance for our equity statement. And then we know we've got the net income. We've got the income statement done already. And then the only other thing I'd be looking for is the drawing. And this handout, I've got where it says dividends in parentheses, that's the drawing. That'll be the other item you would need for the equity statement, which is that 1,500. So if we do that, So now I'm going to kind of page over and let's take a look at this thing. So here's your equity. And notice there's that beginning balance I just talked about. The net income of 2,200 gets added. And then there's that drawing or dividend account that you subtract. You'd get an ending capital balance of 64,500. And I'll just kind of make a note again on this. This is exactly what you've been doing all semester. There's no difference in the equity statement I'm showing you right now and the equity statement that you would have done at the beginning of the semester or even the one that you're doing on the project. It's the same thing. So if we've got that, I'm just going to leave this up for a minute. So we've got your income statement over here. That's financial statement number 1. And I'll just kind of draw this arrow here where we've added the net income. Here's our financial statement number 2, which is equity. And then of course, the third one, which I'll talk about in a minute, is your balance sheet. Now, this is the one you need to pay a little bit more attention to in terms of detail. So I'll kind of integrate a little bit of test stuff in here at this point. On your test, when you do your test next week, there is a problem in Connect where I actually have you prepare. I believe one of the problems you have to do an equity statement, which that's I'm showing you this right now. And another problem is this one specific problem on the test where you will have to prepare a classified balance sheet. All right. And Connect has all these little drop down buttons where you'll have to select current assets and current liabilities and so forth. That should walk you through it. But I just want to kind of give you a heads up. Do pay specific attention to how the classified balance sheet is set up in the different categories. So I know this is the solution to this. So let me kind of page over here. And this is my answer to the classified balance sheet. And this is the format that I've shown you. I believe the exam format will be more of a vertical alignment, but don't let that throw you off. You still have to type in the categories. So on this, take a note. You've got current assets. That's a category. You've got current liabilities. And then note, I call this one property, plant, and equipment, which is also your non-current assets. And when you take the exam and you'll have to select a drop-down arrow to call a title, look for something where it's talking about long-term assets or property, plant, and equipment, or something like that that's going to indicate it's not the current asset, but it's the non-current heading, because they'll want you to put these headings in there on the test as well. So this one we've got current, and then of course there's your non-current assets, and then we've got current liabilities. And notice in this case there were no long-term liabilities. If there were, you'd simply just say long-term liabilities, like a long-term note or a mortgage, and you just have to look at the date and you need to put that in this category. So let me go back to the handout. And of course, this was, let me write this here. All right, so let's say this was a problem and you said, okay, I'm putting together a classified balance sheet. I need to know what my current assets are. And so this one's pretty simple, but I'll just kind of highlight it. So we've got cash, accounts receivable, prepaid insurance. Those would be current because typically those would be used or converted to cash within 1 year. It's always that 1 year. So just in case, and this is something you might want to be studying, is how to recognize what the current assets are. Cash, AR, pretty common ones. Anything prepaid by default, unless they tell you otherwise, anything prepaid is generally going to be a current asset as well. So in this problem, you had 3 of them. And then of course, there's the equipment account right there. That of course would be a long-term asset, or sometimes it's referred to as a fixed asset, or sometimes just property, plant, and equipment. I know I'm writing over this, but just you can go back and play this again. But at that point, and clear this again, that's basically it. Now note, because this was intended to be more of an in-class problem, not just to take it home and just look at the answer. Generally, I would also have a problem where there would be accumulated depreciation included. In this problem, you don't see any sort of accumulated depreciation. In fact, you don't even see depreciation expense. That wasn't the point in terms of my intent on this part of the handout, but this accumulated depreciation, just kind of giving you a heads up, if that were to show up as well, Just make sure you would need to pair that up with equipment if there was any. Okay. So just for example, and this is hypothetical, and then I'll go back to the solution. So for example, if we had accumulated depreciation of, let's say, $2,000, I'm just making this number up. All right, if we had that in this problem, and I said prepare the classified balance sheet, on the property, plant, and equipment part on the balance sheet, what you would have to do is you would show equipment like this. I'm going to abbreviate here. Equipment was at 60,000. And then you'd want to say less the accumulated depreciation of 2. And you'd want to show 58,000 as your net equipment here. That's your net book value. All right. So you'd want to actually have this calculation drawn up. Oh, I just keep getting out of the equipment and then subtract out, if you had it, $2,000. Again, I'm making this number up. That's not actually in this problem. This problem didn't even include depreciation expense, which normally you would have that. Okay. So I'm just telling you a heads up, if you like get to the test and you're like, wait a minute, what do I do with this accumulated depreciation? Just remember that gets paired up with the equipment account, and you're going to show it as a deduction from the equipment account, and you would show this in the Connect problem. Just make sure you do that. Okay. All right. So other than that, and so then that would be your assets. Now, the other thing you would then look for is your liabilities. And on this problem, you've got, and my stylus is acting up here. All right. Unearned service revenue. The unearned makes it an obligation. That's a liability. You got notes payable. And then I'm looking, oh, of course, there's accounts payable. And I believe that's it. So these 3 right there would represent your liabilities. So let me give you a little insight here. If they don't tell you anything else about that note payable or unearned service revenue, you assume that they will be current. Always assume it's current unless they tell you something specific. So there are no long-term liabilities in this handle. These are all current. In fact, accounts payable by default is always a current liability. Okay. Unearned revenue by default is always a current liability. Notes payable could go either way, because notes, by the way, a mortgage is technically a note. And people all know mortgages are usually long-term. So if they just say notes payable, and this problem left everything out, then just assume this one is a current. If they had said notes payable due in 2030, let's say they added that as a note to that. If they had done that, then of course, looking at the date here, we know that would be a long-term liability, but they didn't do that. Okay. All right. So after you would do that, then we go back. Now let's go back and look at the balance sheet. And you can see here that we've got, here's our current, my thing's not lining up here. All right. We've got our current assets listed right here. And notice property, plant, and equipment. Notice I just listed equipment as 60. And note there is no accumulated depreciation. Again, just like I just showed you, if there was accumulated depreciation, you would say less accumulated depreciation right after the equipment account as a deduction from that 60,000. You'd show that in a separate category. Okay. Now, your current liabilities, notice you've got is accounts payable. There's your unearned revenue, and then there's your notes payable. Total current liabilities, 45,000. So notice we got current assets, current liabilities, and of course, here's your capital balance from your equity statement. Okay. So this would be then, let me clear this all out, your financial statement number 3. Since I got this up, before I even get into any analysis with you today, be very familiar with how to recognize current assets and current liabilities. Make sure you're able, I don't know why that popped up. Hold on just a second. I gotta get that. Make sure that you're very familiar with how to recognize the current assets and the current liabilities. And so that might be something you might want to study this week, just to get familiar with what the different ones are. Your textbook gives you a whole bunch of examples. You can, of course, study these handouts. And once you've done that, you should be fine. Okay. But, the balance sheet is still the balance sheet. It's still the fundamental accounting equation. So if you can handle that, because that's a big part of and lots of part of the test, I'll be asking you questions about what's current and what's not current. So know that concept very well. So know, again, very well. Let me go back. This is just the handout solution. Know this format on the income statement. Know the revenue minus cost of goods sold gets you to gross profit format, and then you subtract out your operating expenses. Of course, equity statement, you've been doing this, but know this is a formula, but know how to calculate equity, do an equity statement. Be prepared on the exam to have to literally maybe put something together in a problem, because I'll get to that in a minute. But there's a couple problems I set up where at least one of them, I believe you have to do an equity statement, and then one's a classified balance sheet. So know this basic idea, and they may have you enter actual headings when you do your income statement. And remember, don't forget about the dates. That's pretty important. Remember, income statement will say month ended or year ended. Equity statement says the same thing, but then the balance sheet is the one financial statement that says one date. It's a specific point in time. So, and that'll be part of the test too. So make sure you're careful with that as well. But, so if you can do that, move this back over. And then of course, you then get to your balance sheet and make sure you have your categories: current assets, current liabilities, property, plant, and equipment, because you'll probably have a couple different categories, current and non-current. Again, I'm not going to give away all the exam, but if there was a long-term liability, you'd have a category that you'd say long-term liability, and then just list that account, and then you get your total liabilities, add your capital, and then that would then give you your total liabilities and capital that should balance with your assets on your balance sheet. So if you can handle that, and then you should be fine with that part of the test. Now, on the analysis, and I'm going to keep it a little more simple today, just because of our time, and this is our last meeting. Since I've got this pulled up, look at the balance sheet right now, because at least for the test, in terms of what I'll have you focus on, I'm more interested at this point in the current ratio or working capital, in terms of that's a simple analysis, but I think it's something you all get. And so what I'd be doing there is I'd say, okay, if I want to calculate, let's say, the current ratio, or let me start first with, let's say, working capital. What I'm doing here is I'm going to be comparing my current assets to my current liabilities. So you've already, and that's why you put it in this format. You've already put it in that format. So just kind of standing back, the idea here is this: current assets, 1 year, right? Converted to cash or used within 1 year. Liabilities, same idea. They're due with 1 year. We're matching them up. So at this point, if I were to say, do we have enough current assets to pay our current liabilities? And generally speaking, that's how you do it, because this is what's due right now. Just eyeballing it, I got $49,500 of current assets and $45,000 of current liabilities. You always want your assets to be more than your liabilities. And you obviously say, well, yeah, you do have enough assets to pay them. And so one of the calculations, or they call it a ratio, you can look at is what they call working capital. So know what that means. Working capital is when you take the current assets and subtract out the current liabilities. So in this case, you would take the $49,500, subtract out the $45,000, and that would give you what, $4,500, which is a positive working capital. And that's what you need to know for that one. And so this basic analysis is that, cash is important to have. Businesses need money. And this is one measure, it's called a liquidity measure, that a bank or a creditor or an investor would look at in terms of, if, should I invest in your company? Should I give you a loan? They want to first see how your operations are. Do you have a good cash flow? And essentially what you're doing here is you are assessing risk. That's what you're doing. Okay, so that would be working capital. Now, the other one that I would highly suggest you're aware of for the exam would be the current ratio. And the current ratio takes the current assets and divides by the current liabilities. So you're still looking at current assets and current liabilities, but you're dividing. So you take 49,500 and divide that by 45,000. You're going to get one something. And I got that over off to the side here. If you go back and look, you'll see that the current ratio, I believe it turns out to be right at 1.1. So you might be saying, okay, is that good or bad? So again, that equals, it's about 1.1. It depends. It's hard to say. Generally, most businesses would like a current ratio of about 2 to 1. They would like to be able to double up. Just, you got to have some safety in there just in case sales go bad. Like, a lot of companies, you'll find out that, we're in this pandemic right now, and, a lot of people have been laid off. There's a lot of businesses that are struggling, but you will find at the end, when this thing comes back and we start to get the economy back, that usually the businesses and organizations that survived and were able to thrive a little bit is, number one, they didn't have a lot of debt and they had some cash, they had some reserves. And a lot of, it's scary because, I was watching something, they were talking about, even, for example, BJC, the Barnes Hospital. They're starting to lay off people. They're doing furloughs, because there's a lot of people who are not doing their elective surgeries right now. And that's revenue. So they're losing out. And of course, I don't know what their debt is, but I'm not trying to indicate that Barnes Hospital is going to go out of business. I doubt it. I mean, it's a monster. But you're going to see a lot of places filing for bankruptcy protection, a lot of stuff happening. And if you go back and you look at their balance sheets, you'd find out that they don't have a lot of cash and reserves. That's one problem. And then the other problem they might have is they have too much debt, or they have some debt that they can't pay right now. And that's a problem with, and there's a lot of problems with that right now. Because a lot of companies, a lot of businesses had that, and all of a sudden, if you don't have sales, you don't have cash, you don't have your revenue coming in, you can't pay your bills. And that's why, the government was trying to send out those stimulus checks and some loans to these businesses to help them keep going. Because if we don't have small businesses, that pretty much is what drives this country. But just doing some basic analysis, talking with that, this is why we put these balance sheets in this format. It helps you to analyze. It helps you to predict and make decisions about what's going on within the company. And I keep on saying investors and creditors, this isn't just for people outside of the company. This is for your internal people as well. This is for your managers. This is for your accountants. They're looking at this all the time, because what's the thing you got to do right now? You got to pay your bills right now. That's your most immediate concern. You got to pay your employees. And so I'm just going to focusing here on cash and accounts receivable. But the idea here is current assets is a category. You want to arrange your balance sheet into that category. It helps you figure out what those are and how much your current debt is, and do you have enough money to now pay your debt? Okay. It's a pretty simple analysis. Now, the one we're doing here is the current ratio, where you take current assets divided by current liabilities. And that's the only one you got to know from me on the test on this part of it. But there's other ratios that are even more conservative. What they do is, there's one, it's called the quick ratio. And the quick ratio does the same thing here, but it leaves out prepaid insurance. It would not include, it would only include essentially your cash. It's cash and what they call cash equivalents. It's not going to be interested in anything other than just pure cash, which is, would be your cash and accounts receivable. So it really tells you, for example, if you couldn't sell your inventory and you don't have any sales, it's purely just looking at cash compared to your debt. So, and most of the time, your quick ratio would be much smaller than your current ratio, because your current ratio could include things like prepaids and inventories and so forth. But remember, what if you can't sell inventory? Then even though that's a current asset, it's still going to affect your cash flow. Okay. So let me go back over here. A couple more things. I'm going to wrap this up, and I want to get to the study guide. I'll have a few minutes to talk about that. So if you got that, and I put, and of course, here's all the key ratio answers right here. I gave you, we already talked about working capital and current ratio. The other three, I'm just going to talk briefly about for a minute here. So if we did gross profit, your gross profit percentage would simply be this. What you would do is is you would take the gross profit, in this case, it's 32,200, and you would divide that by 58,000. And that's it. That's all you do. It's just a ratio. And then in this problem, you got about 55.52%, or some cases, some people would look at that as saying, technically that would be, I'm going to write this in dollar form, 0.5552, which means that if this was like a merchandiser, it'd mean for every dollar of merchandise they sell, they're making 55 cents. Almost 56 cents they get to keep. That's gross. That's before paying their other bills. If this was a service company, same thing. For every dollar of revenue you're earning, you're keeping about 55 cents on the dollar. That's the gross. That's before, of course, you pay all those operating expenses up there. All right. So that one's called the gross. I call that your gross profit percentage. The one I like to compare that to, though, is I like to compare that with what I call return on income. And you can see there the return there is 0.0. I left it in dollar form, 0.038. And this is just more for learning at this point, because I'm not going to test you on this one, but I want you to say what you're comparing there is you're comparing bottom line net income, which is 2,200, and you would be dividing that by your revenue, which you got 0.038. What that means is they're keeping about 4 cents on the dollar. That's net. That's assuming you paid all your bills. You keeping for every dollar of sales revenue gross, you're keeping at about 3.8. Sometimes they like it as a percentage, but I like to look at it more in terms of a dollar amount, because I think that makes more sense to you. You're keeping almost 4 cents on the dollar. And then, of course, the question is that good or bad? And of course, you'd have to do some analysis more. You can't just say good or bad at this point, but you would compare it to competitors. You look internally how you're doing cash flow wise and so forth. And at the end of the day, it really comes down to volume. You know, if you have a lot of volume, and as long as you have a positive return, you can make a lot of money. All right. So at that point, you know, I'm just telling you this just to be familiar with that. And then, of course, the debt ratio, which I always like to talk more about that one. The debt ratio, that's just where you're comparing your debt to your assets. So if you went back to your balance sheet, go back over, I got what, 41, call it 41%. So if we went back over here, all I'm doing there is I'm simply comparing, all we have is current liabilities. I'm comparing that 45,000 and I'm dividing that by your total assets, right? So the 45,000 divide by the total assets. That's all I did. And in this case, we came up with about 40, I believe it's 41% debt ratio. And again, that's just telling you how much debt you have relative to your assets. Remember, debt's scary. That's a leverage. That's something that a lot, I think I saw something, I heard something on the news today about, J. Crew or some other companies, going bankrupt, airlines having a problem right now. The problem usually with bankruptcy is you have debt and you can't pay it. So then you have creditors then trying to come at you and say, well, pay us now. And of course, if you can't pay them, then what they tend to do is they want to then try to take over your business or liquidate your assets to pay the debt that you owe them. So when you file this bankruptcy protection, all that stops and they have to stop harassing you. All right. So that's there's a lot of that's going to be going on in the next couple of years, not just this year, but it's just probably the new norm until we get this economy back. But I'm just saying this is an accounting class, and I'm showing you how to look at these financial statements. And we spend a lot of time on putting together the financial statements. And this chapter is looking at not just doing that, but also doing some basic analysis. And what does this stuff actually mean? Why do we actually do this? Just to show you that this is very important. Businesses need to know what they are in terms of financial terms. And I've shown you here, this is 5 different types of ratios. Guys, there's hundreds of ratios you can look at, but we're keeping it pretty simple. And I'm just looking at some of the main ones. And, going forward in accounting, this was actually a big part of the CPA exam, that in several sections, they expect you to, and they did a lot more ratios than what we're doing, but they expect you to not only to know the ratios, but also know the meaning behind them. Why are you actually doing this? And I'm not going to talk all about CPA, but, this was on several different sections of the CPA exam. So they do want you to know about financial accounting ratios. Now, if you do take managerial accounting, or I'm sorry, financial accounting, you do study these in more in depth. You do a lot of more ratios in that class. All right. Okay, so that's it on this. So last thing I'll say on this, then I'm going to put up the study guide. So again, know these formats. And by the way, you got the solution. You got this handout solution in Blackboard. Just go to chapter 13 module. You'll find it. I got all the answers to. You can go back and study it. So again, financial statement number 1 is your income statement. Then you've got equity, and then you've got, of course, the classified balance sheet. Be very familiar with number 2 and 3 on the exam, because you'll definitely have to put, I believe, there's a couple problems where you actually got to put one together. They'll give you, like this handout, they'll give you a list of accounts, and then you simply have to put together the financial statements like that. Okay. All right, so I'm going to leave this one, and now I'm going to talk. I got about 15 minutes. So now I want to put up, if I still have it up, let me find it, is the exam 3 study guide. All right, so unfortunately, we did not get to take this test in person. I actually think the in-class exam is probably more difficult than this one. Not that this was a hard test, but it's a good test. But the stuff I had you do in class, of course, since it's a face setting, I had more things, but I'm kind of limited in terms of what I can give you in an online exam, but it's still a pretty good test. But just a couple things here. Notice it says online exam located in Connect. Remember, just like exam 2 is in Connect, exam 3 is ready to go as well. It'll be available beginning on Monday, May 11th. There are 30 questions, combination, multiple choice, and when I say essay problems, those are the problems where I think on this one you'll have to put together. There's a couple of problems I think on adjusting entries where you may have to actually do an adjusting entry or two. And I know there's a problem or two where you have to prepare a couple of financial statements. Just kind of giving you a heads up. When I say essay problems, that's what I mean by that. You have to kind of use the drop down arrows or enter the amounts, and they'll kind of guide you through that. Another important thing is I'm giving you 3 hours on this test. That's very generous. I would say, generally speaking, most of you should be able to get this test done in half that time. I don't suspect it'll take you 3 hours, but I'm giving you enough time, I believe, that you're not rushed, but don't try to take the full 3 hours, but you'll get 3 hours to take it. I think most of you will have it done in probably an hour and a half, maybe less than that. Just give me a heads up. It's over chapters 12 and 13. And here's the deal. Please pay attention to this. This is due by Friday. I believe if we had an in-class test, it was either Monday or Wednesday you'd be done with it. But I want everything done in Connect by Friday, May 15th. And that's the due date. A lot of people forget about the one. They always think the default is Sunday. It's not Sunday. And I have to remind my online classes that on their exams is due on Friday, not on Sunday. Now, as I page down here, I put all the different concepts that I cover. I think this is just 2 chapters that you need to be aware of. So notice we've got stuff from accrual accounting. That's chapter 12. Matching principle, time periodicity, all the stuff we did with chapter 12. I spent some time on that. Interest, know how to do interest calculations. PRT, I gave you a couple of handouts. I'd study those. Depreciation expense, unearned revenues, prepaids, accruals, bad debts expense. That's your uncollectible accounts expense, some of those new ones. Be able to know. I mean, these will be in multiple choice format. They could also be in one of the essay problems where you'll have to literally calculate the amount and then use the drop down arrows to enter the adjusting entry. Be familiar with all the new accounts that were discussed in chapter 12. Remember, we had that allowance for uncollectible accounts. I call it allowance for bad debts. Know that. We had interest expense, interest receivable, interest revenue. Know those. Okay. So these first 3 bullets obviously pertain to chapter 12. And then the next one says, be able to prepare the 3 financial statements. Notice income statement, know this cost of goods sold format. There could be some questions in multiple choice format asking about that. Of course, equity statement, I just told you, and of course, the classified balance sheet. When I want explicitly told you, you got to do those. Know these ratios, gross profit, working capital, current ratio. Notice I left out the other ones. I actually added those other ones. Your textbook didn't really go over those, but just because of our time, I focused on 3 of them that I feel like are pretty easy to understand without taking advanced skills to know these. These are pretty easy to get down. Be very familiar with the classified balance sheet. Note the specific categories of current assets, non-current assets, current liabilities, and non-current liabilities. Okay. Study suggestions. Emphasizing review all those learning modules, chapters 12 and 13. And then, of course, you know where those are in Blackboard. Review the end of chapter exercises. Review those handouts. I think if you go back and play those, if you want to go back and review the Zoom meeting recordings, you know, that's up to you. Those are all in Blackboard as well. You know, in fact, they're all in MP4 settings. So you can fast forward those however you want to, but I tried to illustrate everything that I'm going to test you on. I typically, if I don't cover it, I don't test you on. So I know some of you have been coming diligently just about every time I've done these meetings for the last 4 weeks. And so I think for you guys, that should be helpful. Okay. Now, so this will be exam 3. Okay. Now, when you go into Connect, this is again starting on Monday, you're going to also see something that says exam 4. And I'm going to send out an announcement on this later in the week. So I'm just going to tell you right now. I have a different study guide for that one. That's going to be the way that one's going to work like this. It's optional, and it's over chapters 1 through 6. It's a comprehensive type of test. It's all multiple choice. I think it's like 50 questions, but when I'll send out the email, you'll see that study guide. But that one, the intent of my case is to be a replacement test for either exam 1 or exam 2 if you had a low score or if you missed a test or something wasn't working. Because if you recall, exam 1 was I had part in class and part Blackboard when we were still meeting, but that kind of fell apart once we had to stay at home, once we had to do remote learning. But that doesn't mean that you shouldn't take exam 3. In other words, what's going to happen here is exam 4 will count as a 4th exam if you take it, and then I'm going to drop your lowest of exam either 1 or 2. So essentially, I'm going to count your best 3 exams. So let's say you took exam 1 and you got a bad score. You got a score you didn't like. You can take that optional test, exam 4 optional exam. And if you do better than the other test, I count the best score, I'll drop the lowest. In other words, it cannot hurt you. It cannot hurt you to take it. Now, some of you may run into a time crunch depending on how many classes you take and what's going on in your lives, because the due date on this exam 4 is the same as exam 3. I still want everything in by Friday. Okay, so I'm adding this. This was not on the original syllabus. This is something I'm adding because I know that there was a few students that are still trying to pass this course. They actually missed exam 1, or some of them may have missed exam 2. Okay, so in that case, the remedy would be to take this optional test, and they take the optional exam 4. That'll count as a replacement for exam 1 or 2, as long as you score better. All right. Now, let's say you take exam 4 and you take it next Friday night, and let's say you do very bad on it. It can't hurt you. All right. Because if let's say you had a 70 on exam 1. In fact, let me illustrate this right here. Just sometimes if I draw it out, it might make more sense to you. So let's say, let me just say we have exam 1, 2, 3. Of course, 3's coming. You all have to take 3. So let's say exam 3 is a 90. Let's say exam 2 is a 90. And let's say exam 1 is a 70. And you might be happy with your score at that point. You might say, I don't want to take exam 4. That's fine. But let's say you take exam 4 and you score a 90. If you do that, then I don't count that. I would count exam 2, 3, and 4. Okay. Let's say you got a 70 on exam 1, and let's say you take exam 4, and let's say you get a 50. I won't count that. I'll still count the best score. I will not let that exam score hurt you. It will only help you if you score better than one of your exam 1 or exam 2 scores. And of course, let me know if that doesn't make any sense. And I'm going to try to type that out. I'm going to try to articulate that in an announcement, and you'll get that later in this week, probably by Friday. But I want to go ahead and mention that because today we're talking about exam 3, and then I don't want you to be confused if you see another announcement come up about this thing called exam 4. That's It's all multiple choice. It's like 50 questions. I give you the same time I give you like on this one. I think I give you up to 3 hours. I don't think it'll take you that, but it's really about time management. If somebody may not be able to do it, time and so forth, that's fine. But I wanted to try to do something for the class, for those that are still struggling, that they're trying to figure out, because I get the question all the time, can I make something up? You know, I messed up on this test, but I think I got it now. And this would be a remedy to kind of help some of you overcome either exam 1 or 2 if you had a low score. Okay. And the other nice thing about that is because most you are already prepared for that as well anyway, because if you're able to handle exam 3, or as you're studying for exam 3, as you all know, everything in this class is comprehensive. So debit and credit rules, account balances, the concept of posting, all that at this point you know anyway. And that's really what that exam 4 is about. I'm just going back and just kind of testing your knowledge over the basics of chapters 1 through 6, which most you already have down now at this point. Since if you're in this chapter, you have probably an understanding of, you know, a debit and credit and how to record debits and credits. You understand the journal and the ledger concept as well. Okay. So that's where we're at. Hold on a second. So let me go ahead and clear this. And I've got everybody up. I still got 3. Does anybody, I know we got about 4, 5, 6 minutes. Did anybody have any specific questions? You can send me a chat, or you can chime in here. You can ask a question. Anything that I tried to show you today? Does anybody have anything? Any questions?
No, I don't have one.
Everett, you're okay. Ralph, good?
No, I'm good too.
Cool. Anything else? Odig?
Excuse me, can you talk a little bit more about the project?
Yeah, a question. Well, today I'm just on the test, but did you have a question on it real quick? I guess I got a couple minutes. Odig?
The project, because I
Yeah.
just started doing that, it's gonna do this Friday, right? Tomorrow. I mean, Friday.
I believe it's due Sunday. No, it's due Sunday.
Oh, it's Sunday. Okay.
Yes.
All right. Okay. Thank you.
And you can also follow, I have my illustrations in Blackboard. Go back and review those illustrations. And
Okay.
I think one of our Zoom meetings, I think it might have been I think it was the first Zoom meeting I did with you with this class. I think I also went over the project in detail as well. So you might want to go back and play that Zoom recording, and I think that'll help. Okay.
Okay. All right. Thank you, sir. All right, sir.
I'm glad you brought that up. Yeah, guys, don't forget project is due in, I think it's Sunday, and that's due in Blackboard. And I don't believe it'll take you more than an hour. If you follow through the entries, and since it's all in the spreadsheet, I don't believe it'll take you more than an hour to get that thing done. That's just an estimate. Most of the time I talk to students in the past, I say, how long did it take you to get the project? And most of them said they got it done in an hour. Now, of course, if you had to do it manually, it'd take you longer because you'd have to set up all the journal and the ledgers and T accounts. But since I have everything set up for you, all you're really doing is entering journal entries. You just have to know how to use it. And that's what I think I have a couple illustrations. One illustration is in the Zoom recording. And I think I have another illustration. If you go into go into Blackboard and click on the project module. Let me see if I got that up. Oh, there it is. Hold on just a second. I believe if I clicked on learning module and then go down to where it says project module, and then notice it says project instructions, I have another video illustration in case you get lost or you have a question. I think it's a pretty good illustration. I'm walking you through how to use the spreadsheet as well. So you got it there. And I think you also have it in the Zoom meeting recordings. I think it was the one on, I'm paging down here, of course. I think it was on, yeah, notice it says Zoom meeting, April 20th, project and chapter 12. That was the one that was recorded on April 20th. Okay. So then remember, you'll go to this link where it says submit project. You'll save it, you'll download it by May 10th. And I think the project is 50 points. One more thing. So you've got that. You've got, oh, my screen's freezing up. You've got the quiz. Don't forget about the quiz. Let me go back. where it says submit quiz assignment. I sent this out before. Chapter 13 quiz is also due. Don't forget to get that chapter 13 quiz in. That's by Sunday. And to help you guys out, I left up these other 2 quizzes. These quizzes are still open in case you had not taken them. And don't admit that to me now, but you can still take these as well. I left them open, but come May 10th, everything will be taken down. So you've got that, you got the project, and of course you've got the exam 3 next week, and of course the optional exam 4. And then the other thing I was going to tell you is as I'm grading the next couple weeks and getting grades posted in Blackboard and so forth, and I'll say this one more time, as it pertains to the syllabus and the grading on the handouts, and I said this before, I'll say it again, as long as you stayed in the class, any sort of handout illustration, anything that I would have done in class, and as long as you stayed in the class, I'm giving everybody perfect scores on the homework, on the in-class handout part of your grade. And so I know some of you may have missed a couple if you had missed them early on. Do not worry about that. At some point in time, I will update that. But you will all get, I believe it's 50 points. You will all get 50 out of 50 points on the handout portion of the class. And that's, I normally don't do that, but I did that because of all the stuff happening. And I thought, it's more effort anyway. It's more, you'd show up to class and you submit it. But I thought, the logistics of trying to get all that set up in this format, I just said, forget it. I'll use that as teaching as I'm doing my Zoom, but as long as you stay in the class, I'll give you those points. But everything else, the only thing else you got to worry about really is your quizzes, the project, and of course the exams, and that'll be next week. So this was our official last meeting. If something comes up and you have a question about any topic, you can email me. If you notice one more thing, do you see this little link over here where it says Zoom personal meeting? That's where if you want to meet personally with me about a grade or something, we just have to set up a time, and you'd log in just as if you were logging in a Zoom. Here's the link. And it's basically kind of like a personal one-on-one, like an office type. But of course, we'd have to figure out a time, and of course, just let me know and I can try to work with you on that if you need any extra help on that one. I've actually had a couple students already do that, and most of it was just they had some questions about grades, but it's kind of cool. It works just like this, except it'd just be you and me. So between now and next week, if something comes up and if you need some extra, just let me know, and I'll be glad to try to help you out with that. Anything else? Anything at all? Remember, this Zoom meeting is recorded, so anything I talked about today will be posted on Blackboard later today as well. Are we good, Everett, Ralph, Odig? Questions?
Yeah, thank you.
Thank you, guys. Ralph, good? All right, good. All right, guys, I'm going to sign out. All right, again, email me and watch for a couple more announcement postings to your student emails by the end of the week. All right, have a good one.
All right.
All right. Thank you.
Thanks, guys.
Bye.